Today we're honored to host Dr. Mohammad Al Sabban, who was until the 1st of September the senior advisor to the Minister of Petroleum and Mineral Resources in Saudi Arabia, a position that he has held or had held since 1997. He led the Saudi delegation and served as the chief negotiator to the United Nations Framework and Convention on Climate Change since 1991 and participated in OPEC ministerial committees and special meetings. Today, Dr. Al Sabban will address us on the future of oil and new energy sources, and we look forward to hearing his assessment. Dr. Sabban, the floor is yours.
Thank you very much, and let me start by saying I'm really thankful for the Institute for allowing me to address or to speak before the distinguished gathering here. And let me start by saying that the topic that I will talk about is going to be totally related not only to the oil market, but also the impact of the future oil market on the GCC countries. Being a GCC national, I'm extremely worried about the different developments in the oil markets that will have sustained and structural impact on the market, and that will lead to a certain or gradual deterioration in the oil revenue of the GCC countries, something that GCC countries are not yet prepared to tolerate, if I can say that. The different theories with regard to the peak oil, basically it was known as peak supply of oil. I think it proves not to be the case these days with the huge amount of discoveries of oil and gas in different areas with a lot of reserves. The problem that we are facing, and I think it is becoming very serious, is the peak of the demand, oil demand. And I think, as we all know, we have seen the IEA reports that the demand for oil in the OECD countries has peaked since 2005. But because of the economic slowdown in the West, this has not appeared to be the case as it is. In other words, because of the economic slowdown and the lower demand for oil in the OECD countries, one cannot distinguish between the structural change that happened in the demand and got it lower, and the part that is related to the economic slowdown. And I think this has appeared to be the case in the OECD countries. As a matter of fact, Daniel Yergin said just a few months ago that the economic downturn has been masked a larger trend in the oil demand of developed countries. And I think he is right, absolutely right. So when demand peaked in the OECD countries and start to decline, we see that this is the first sign of an age where could later on be announced as the end of the oil era. Of course, in the wake of the different scenarios that we see from the IEA and other institutions, international institutions, this may sound to be a little bit strange, but looking at the seriousness of the efforts being undertaken by developed as well as developing countries in order to reduce consumptions of oil, we are worried that in a matter of a decade or two, we will see that there is what I call economic depletion of oil. It doesn't have to wait until we have physical depletion of oil before we announce the end of the oil era, but it is more of what you can produce economically. And if demand start to decline, not only in the OECD countries, but also in the emerging economies, now, of course, what sustains the high demand for oil internationally is the continuous growth in the demand for oil in China and some other emerging economies. But even these countries are doing a lot in order to change their consumption patterns, in order to moderate their consumption of energy, and in particular, consumption of oil, for different reasons, including energy security, including mitigating climate change, etc. So developing countries, we cannot say that, well, let us forget it, even if developed countries start to decline, the demand for oil in developed countries start to decline, we still can rely on the demand for oil in the emerging economies. This will not continue for a long time. As a matter of fact, just 3 weeks ago, China announced that it is allocating about $370 billion in order to finance the efforts to reduce oil consumptions and try to reduce pollution in China. And that's, of course, according to the different figures, this may not sound a large figure, but I think this will not be the last effort or the last financing for such efforts in China or in any other emerging economies. So at the same time, we see that alternative fuels already being put in place. We have seen, in the past, we used to joke when we talk about electric cars, and not anymore. Electric cars are now being displaced in different countries. The infrastructure start to be in different countries, and even the cost of the electric car is going down very rapidly. The use of biofuel as a part of the blend of fuel or gas, it is mandatory in many countries in order to continue using biofuel, even though biofuel, as we all know, contribute to the problem of the food production and the high prices of food. The second thing is basic, of course, biofuel now, we are talking about the second generation or next generation of biofuel, where the impact on agriculture is not that much, but still, as far as the United States, for example, the corn production is being affected because of the mandate to have higher and higher blend of biofuel in the used gasoline. In addition to the biofuel and the biofuel and electric car, we see that the public transportation in many developed countries are now using gas, natural gas. and I think that will continue in the wake of the huge discoveries of natural gas, what is known as shale gas. I will talk about this later. Let us concentrate on the demand side. So I think the alternatives are coming, and they are more serious than any time. And it is not cyclical change. It is basically structural change that is happening. And it has been, as said, masked by the economic slowdown. But once we start to grow, we see that the impact of the use of alternatives, the impact of energy efficiency measures, and the different mandates. And you add to it the international discussion on climate change. Even though it is now stalled for one reason or another, but the different activities under the umbrella of the UNFCCC is reflecting the willingness of different countries, developed and developing countries, to do a lot in the area of reducing greenhouse gases. And this is a fact. They are not waiting, even developing countries are not waiting for finance from developed countries, because developed countries are basically giving very little in this area. And they are basically changing some of the ODA in order to finance some of the greenhouse reduction projects in developing countries. But they are doing it out of their pocket. And they know that by doing these projects, by having solar energy project, this will be beneficial not only to the environment, but also economically. So for them, this is very, very profitable to do it and not to wait for international financing. We see also, not only under the UNFCCC, we see that there is a strong call by G20, by G8, the Rio Summit, etc., to phase out fossil fuel subsidies. And once this is happening, especially in developing countries, definitely this will have huge impact on the consumption of fossil fuel, in particular oil. And I'm saying, excuse me, I'm saying in particular oil because we all know from the practices in developed countries and some developing countries that oil products have always been discriminated against. While we see, for example, oil is heavily taxed for different reasons, we see still coal being subsidized in Europe and some other areas, and we see even nuclear power is being subsidized along with some renewable energy sources. So I think the climate change effort internationally, the coordinated policies internationally, the domestic action by different countries, including developed countries, will all point to a certain fact that demand will not continue to grow as fast in the coming years and gradually will start to decline. This is a fact that we need to accept as GCC nationals and as GCC governments. At the same time, we see when we talk about the supply of oil, we see that there are huge discoveries, new discoveries of oil and gas. Now the United States is talking about energy independence because of its discoveries of shale gas that started 10 years ago. But now with the technological breakthrough in the US, as far as how to fracking, the fracking process of the shale rocks, we see that the United States is talking about not only not to stop importing gas, but also to export gas. And when they talk about being energy independent by 2020, even though some are saying this is not realistic, we see from our perspective that even if it is not 2020, it could be 2025. And if we lose such large consumers as the United States, followed by the other OECD large consumers, and then some of the emerging economies, we see that gradually, not only on the demand side, but also on the supply side, we see new additions. Now the total oil reserves is exceeding 1,600,000,000,000. It used to be 1.1 trillion barrels. So it is increasing, and if you add to it the increase in the natural gas reserve, and also the huge investment to increase the production capacities in OPEC and non-OPEC countries, we see that the world will be washed by oil. And if you take the role of OPEC as a swing producer, then the burden of such increase, huge increase in supply and reduced demand will be basically put on OPEC countries. And Saudi Arabia will be the main burden will be put on Saudi Arabia, since it is the largest producer within OPEC countries. There are a lot to talk about this, but I would like to come to the point of why we are doing almost nothing in the GCC countries, in the GCC area. The problem is that high oil prices always make policymakers in our countries more relaxed. And that, well, even, some of the close officials to the policymakers, they are giving the wrong impression to the policymakers that, well, these high oil prices will continue for a long time, and that we shouldn't worry. Something that nobody can imagine that it is happening. And we see the results of such thinking is that we are basically doing nothing. There are some efforts here and there. There are some projects, government expenditures, etc. But we have basic problems that have not been addressed in our region. We have the unsustainable consumption and production patterns in Saudi Arabia and other GCC countries. Saudi Arabia, for example, is consuming about 3 million barrels per day as far as to satisfy its domestic energy consumption. And similarly in other GCC countries where fuel being subsidized, heavily subsidized. Also the problem of unemployment, high rate of unemployment in GCC countries. Very little has been done. As far as also the economic diversification itself, we have, we talked about diversification since the early 70s. And it is in the first developmental plan of Saudi Arabia that the main goal or the first goal of Saudi Arabia, that was in 1970, is to diversify its economy in order to reduce its huge dependency on the revenue from exporting crude oil. That was in 1970. Until now, we are still heavily dependent on the revenue, on oil revenue, to finance economic development, to pay wages, etc., etc. And unfortunately, lately, the break-even oil prices for our budget and the budget of many GCC countries is getting higher and higher. For Saudi Arabia, for example, now the break-even oil price per barrel is $95. That's a lot. That's a lot. This is not sustainable. Given the development in the oil market and that the price is above $100 is basically because of the fears in the region and because of the geopolitics. And if there is nothing here and the area or the region is back to normal, we will see prices go down even below $70. So what to do if your break-even price is 95 and what you get is 70? Of course, in the short term, you will finance it through your assets, through your financial assets abroad or wherever. But gradually, you will go back to accumulate national debt, as we did in the 80s, late 80s and 90s. And that is a very serious problem because this not only will affect the amount of debt that to be repaid, but also will affect the government expenditure. Government is basically the main driver, even though oil represent about 34% of our GDP, oil sector, but we all know that other sectors are oily. If we don't spend from the revenue of the oil sector, other sector will not grow. This is very true. So the problem that we are facing is very, very serious and very complicated. So what to do? I think one thing that we need urgently in Saudi Arabia and other countries to do is to establish or to manage carefully the different sovereign funds that the regions have, the different GCC countries have. We are all amazed by what Qatar is doing, of course. They are very transparent, and also I think their sovereign funds, it's not only one fund, but several ones. They are doing great, and I think they will get gradually the benefit of the wise decisions, different stakes in different companies, different areas, different countries. Even 2 months ago, they are now financing or being a partner in China of the agricultural bank. Something you cannot imagine, but they have vision. But aside from that, probably they do have their mistakes. I'm not saying that it is the best management, but definitely it is the right step, not basically to put your money under the table and just sit there and say, well, as long as the money is there, I'm fine. Because even if you get 1 or 2%, nothing, there is no 2%. 1% on your deposits, definitely this is below the inflation rate, international inflation rate, and this will impact the real amount or the real purchasing power of your asset will start to deteriorate over time. To give it more weight, better management, and full transparency. That's one. The second thing that GCC countries have to do is to move gradually to what is known as knowledge economy, concentrating on education. Education is the key. We still have very poor education system in GCC countries. So we need to look carefully what is the best strategy. Unfortunately, to start with, there is no vision of what we should be doing as GCC countries as far as economic diversification. Different efforts here and there. Even when we talk about knowledge economy, if you ask some of the officials in GCC countries, you need to define what it means. They are still not fully aware of what it means to go to a knowledge economy or knowledge society and how to improve educational system. That's very serious and need to be taken very, very serious. Thirdly, you need to tackle the unemployment problem that you have, creating jobs. The system of giving subsidies to the public not only increasing your budgetary burden, but also it's not productive, will not amount to any new productive results. So I think we need to review even the subsidy system in the GCC countries, including subsidy that we are giving in the energy area. As a matter of fact, the Citigroup report of the last 2 weeks indicated that Saudi Arabia may tend to be oil importer by 2030. This is not realistic in one way or another, but it is a wake-up call for Saudi Arabia to do something with regard to the energy very high growth rate of energy consumption domestically. So this is one of the areas that you need to create jobs. You need to reduce your unsustainable consumption, not only in the area of energy, but sometimes we see in the newspapers, Saudi Arabia or Qatar, #1 in car consumptions, or buying cars, or buying gold. Gold, of course, these days is very valuable. But we should not be proud of being the first in the area or in the Middle East or worldwide in the commodities that are not durable, or that we did not produce ourselves, or that will show that this is unsustainable consumption. We should not be proud of that. So I think there is a long way to go for GCC countries, but policymakers need to be aware that oil will not continue for a long time. And even, the perception that will not be depleted, oil will not be depleted before 80, 90 years from now is as we said, the depletion here that we are talking about is basically the economic depletion and not the physical one. So I think they need to be alert to this fact, and they need to know that all countries are very serious in reducing their dependence on imported oil, and in particular from this area. So why don't we be also as serious as they are to reduce dependency on the revenue from exporting oil? I think we can emphasize or can do a lot in the area of renewable energies, for example, solar energy, other energy. We can do a lot in the area of energy efficiency measures. We can do a lot in different areas in order also to diversify our economy. And of course, other sectors need to be given equal importance, not only education, not only the energy sector, but all other sectors need to be given equal importance in order to have a well-diversified economies in the GCC. That is very briefly the message that I would like to emphasize, and I'll be waiting for your questions. Thank you.
Thank you, Dr. Al Sabban. Very fascinating talk. We have time for questions. I think we have about 25 minutes. I'm going to ask the first question, since I'm sharing here and I have that prerogative. You'd mentioned that there'd been a number of structural changes to the economies that really favor the use of alternative sources of energy, which is a change from what's happened in the past. But if the price of oil were to really drop to $70 a barrel or somewhere in that neighborhood, don't you think that the free market rules would dictate that even with the structural changes that people will go back to past behavior and reliance on oil as opposed to some of the alternative sources?
Well, thank you for the question, but let me say that once you have the infrastructure of these renewables in place, it will be extremely difficult to replace it. It will take a long time. And we all remember the films that used to be in the cameras. Now with the digital cameras, even with the very low price of the films, nobody's buying the films. So if you take that into consideration, I think once these infrastructure being established, once you have in London, where is our, in London you see the different electrical charger close to the meter, where anybody can charge his or her electrical car. These of course, a small infrastructure, but if these similar infrastructure being put in place worldwide, it will be extremely difficult to change it or to replace it. That's one. Secondly, once you do investment in the area of alternatives, then the operating costs will be minimal compared to, so the price of oil will not have that great impact on changing the formula. So that is why I'm saying that this time, the structural changes that is happening in the West and spreading worldwide is a very serious one. And it's not cyclical. I know that in the past, when prices went down, then we went back to a higher consumption, abundant renewables, etc. But it is not the same. It is not the same.
Okay, I'll open the floor to questions. I would ask that you identify yourself and your affiliation, and so that everyone will have a chance, I hope that you'll keep your questions or comments very short and to the point. We'll start here.
Mansour Al-Jamri from Al-Wasat newspaper. Thank you very much for Mansour Al-Jamri from Al-Wasat. Thank you very much for an excellent description of the current situation. What do you think of the Abu Dhabi effort in terms of the renewable energy? They have created Masdar, they have the renewable agency, the United Nations new agency for renewable energy. How is that fitting with your suggestions?
Thank you for the question. I think this is a very smart move by the UAE. I'm worried about one thing that need to be very clear, that you don't need to take actions in order to improve your international image only, but you need to take action that will be beneficial domestically. So I think what they did with regard to the solar energy Masdar, the city is great, but they are doing a lot of effort internationally, including financing some of the projects for free, let us say, that may not be very useful for them, for their economies. So they are taking it as a matter of pride that, well, we are pioneer. They are pioneer. To be honest with you, we love it, what the UAE is doing in this regard as far as the sustainable development, as far as renewables, is something great, and they need to continue on that. Secondly, with regard to nuclear, they need to be a little bit careful. We are in a very close region. We don't have the national expertise in the UAE or Saudi Arabia or other countries. We don't know what to do with the chemical waste. We don't know what to do in a case of an accident. And let us not forget, I'm not saying that we should be against nuclear, but we need to put all of these obstacles and problems in mind. Countries like Japan, just last week, they announced that they will phase out nuclear by 2030. So they will not build new ones, and not only not building new ones, but also they will phase out all other existing plants. Germany, by 2020, they will phase out, they now extended that till 2025, I think. They will phase out all nuclear plants. So I think we need also to look at this, why they are phasing it out, and why it is coming to us, to developing countries. If they are who owned the technology and the expertise are trying to get rid out of nuclear, why we are trying to do it here. So I think all options should be still open, but we need to evaluate this, not to be just buying these technologies, because others will say, look at those stupid. We are trying to get rid of it, but they are taking it. Sorry for that. But anyway, I really admire DOE with some reservations, including the ones I mentioned.
Yes, over here.
Actually, it's the same question as well. Our colleague has said. But I'd like to also say, my name is Doris Martin. I'm from Ernest & Young. You touch bases on education reform. How would that be put in place? How could that be put in place, the countries?
Well, education reform, including reforming curricula, including preparing good teaching staff, including good educational managements, including, changing the way you teach people, you teach students. Unfortunately, now teaching is basically how much you can memorize, and not bringing to the generation how to think. And that needs to be changed. You cannot continue just giving them a lot of books and a lot of things here and different subjects, and you evaluate student by how much he or she memorized. This cannot continue. This is not sustainable. You need to alert them how to think, how to stand before such gathering and try to present your ideas in a very well-mannered way, etc.
Okay, when I do call on you, if you could wait till Ellie brings you the microphone, because this is being covered and broadcast on our webinar, I think. We'll go right here, and then we'll come back to this side again.
Thank you, Dr. Mohammed. My name is Dr. Pablo Fetter. I'm the head of investment of Mumtalakat, which is a sovereign wealth fund of Bahrain. I found your speech very interesting, and there were a couple of points that you made which I found very surprising, because I found them kind of difficult to reconcile with the data that I had. So the first point you made was that demand will decline. Now, my understanding, especially in emerging markets, my understanding is that the per capita consumption levels currently of countries such as China are way below the per capita consumptions of developed countries. So China consumes 1 to 2 barrels a year per capita of oil, whereas the United States, for instance, consumes over 20. So it's a 20 or 15 times factor in between. And more developed Asian countries, such as Japan or South Korea, consume between 10 and 15. So that it seems like unless there is a major change in the trajectory of the development of China, everything indicates that the consumption in China will continue increasing, and you can say the same about India and other developing countries. So in terms of demand, I would be very, I was very surprised by the point you made. So that's one. The second point is supply. You said that supply is plentiful, or you hinted at the fact that supply is plentiful. So I wonder why oil is at $100 per barrel. If supply is plentiful, when it was just 5, 6, 7 years ago, it was at $30 or $40, right? So we had a 3 times expansion in the price. And obviously, that in turn explains why there has been some stabilization in the demand of OECD countries. I was in Europe just recently, and when I tried to tank my car, I found out that the price of oil in Germany specifically is 8 times more expensive than here in Bahrain, 8 times. So no wonder that demand is challenging when you have this kind of price. And obviously, we all know that supply and demand are determined by price, right? So at $100 oil, that has an impact on demand. So the point that I was surprised to hear is that you said that supply is plentiful when the price seems to indicate to me that supply is constrained?
Thank you. Let me start with the second question. You mentioned about your car in Germany and how much you pay. Of course, let us not forget that in Germany and most European countries, international prices are not reflected. There is huge amount of taxes that include in the composite barrel of oil, as high as 70% of the price, finite price. So they are, when prices go up, they go up, of course, but when they go down, they never, in these countries, go down. But why prices are 100? This is a very usual and regular question that's been put during different meetings of the International Energy Forum since 5 years ago. And I remember Podman, the energy secretary of the US, when he came to the Jeddah Forum, when he was Secretary of Energy at that time, he insisted that, well, you need to increase production, you need to increase supply, Saudi Arabia and other OPEC countries, because prices are unbearable. And he said, those who are saying that speculators are the ones who are taking prices to that level, they are not realistic, they are not aware of what is happening in the market. But then even the United States, as the IAA, acknowledged that speculators play a very significant role in halving prices at that level. The United States admitted the role of speculator, and G20 admitted the role of speculator, and they are trying to put some regulations in order to limit the role of speculators. But they are still working. There was a certain period where speculators speculation start to diminish at the end, towards the end of last year, but now, and the beginning of this year, but now we see it is coming back. The fears, the geopolitical fears that something will happen in this region is driving prices to this level, unfortunately. We are not happy with this high price, to be honest with you. And it has been said by Saudi Arabia and many other producing countries. These prices are not sustainable, are not good for us, because it encourages, I don't know whether it is being kept by speculators intentionally in order to allow for investing in other sources of energy or not, but for us as producers, especially those with high or huge reserves, oil reserves, it is not in our best interest to see our market share deteriorating because of these high prices. But something that we cannot do. Saudi Arabia nowadays is producing about 10 million, a little bit more than 10 million barrels per day. And it does nothing to the market. A lot of oil, not water, a lot of oil there in the market, but it doesn't affect prices. We have seen just today, it is 116. Yesterday or the day before, it was almost 117. So nothing, for Brent, the WTI are almost 100. So nothing can stop this. Even if we have the excess capacity of 2.5 million barrels per day. Even if we put this excess capacity, will not change prices. So prices are not reflective of the market fundamentals, unfortunately, these days. Speculators are the main drivers for the prices these days. As far as your first question, I agree with you. At the time, at this moment, demand for oil in China and other emerging economies is growing very fast. As a matter of fact, in the last 2 years, while demand for oil declined by about 2 million barrels per day in OECD countries, it increased in China alone by 2 million. So it's a substitute for the loss. And still continue to increase in India and other countries. But as I said, these countries are not repeating the mistakes of the industrialized countries when they grow. And now they are doing a lot of efforts in order to improve their energy intensity, in order to bring it in line with the rates of, levels of energy intensity in the West, in the OECD countries. And they are very serious. And it may take some time, I agree. But definitely, these investment, huge investment that they are putting will gradually impact, and they are also targeting oil products, whether developed or developing countries, for different reasons. The reason that, for example, China is investing in Sudan, for example, is not an innocent cause, because they want to secure some oil. They know that they need to continue importing oil for some time, but they are on the right path to reduce their consumption per capita. Per capita, of course, but also the intensity, the oil intensity. And this will happen. This should not give us a relaxing attitude that, well, China is there. As I said, China is there, India is there. Don't worry, even if the OECD countries continue, demand for oil in OECD continue to decline, we shouldn't worry because our new customers are there and will continue forever. No. Otherwise, we will be back to square one, and our policymakers will go to sleep, and that is very serious for us. Thank you.
Okay, we have about 5 more minutes, so I'm going to take 3 or 4 questions at once, and then we'll address them together. So if you could make sure you're right on point, and Ellie will come to you with the microphone. We'll start in the back. Now, who else has questions? And then we have 2 over here. Oh, we have a couple over here. So be as quick as possible so we allow Dr. Al Sabban time.
I'll be quick. Thank you for a sobering message. My name is Hassan Jarrar. I'm Chief Executive for Standard Chartered Bank here in Bahrain. I remember a quote I read by ex-minister Yamani, where he said, to the extent, I'm paraphrasing, maybe it would have been better if we discovered water. I think that describes what has become of this region and the people becoming dependent on all the money coming from oil. I've grown up in this region, and I've seen governments here giving people fish, not teaching them how to fish. My question to you is, do you think that unless you go down to the level of the GCC family and the way they raise children to become hungrier for making a living, can we ever change this, I don't want to call it a cliff, but the picture you painted is truly scary. So I'm just wondering if you agree with me that you actually have to go down to the level of the family before you talk about college education or even diversifying the economy. I appreciate your answer. Thank you very much.
Okay, and then here, sorry, Ellie, we're going to put you to work here.
Thank you, Doctor. Greg Cohen, Oxford Business Group. You touched on subsidy reduction briefly, especially in Saudi Arabia, as a necessary move given the high break-even prices. Can you elaborate on the Saudi's contingency plan, if I may call it, given the precarious and tangible social repercussions currently going on?
Okay, and then right here in the front, and then another one over here.
Having said, Abdul Jalil Khalil, mechanical engineer, having said that the oil demand go down and the differences between the oil prices and the budget prices, the differences go up, and definitely this will lead to a big problem, especially for GCC countries where they depend almost on, for example, in Bahrain, we depend on 90% of oil revenue. I think this will lead, do you think time has come now for GCC countries to impose taxes on people. And definitely this will lead to more political problems. Here in Bahrain now, the break even is 114, and they depend on 90% of the oil. This, of course, will lead to very much political problems, of course.
Okay, we'll take one here, and I think there was one over here. So, yeah, and I'll recite the questions generally to you. Yes, please.
Good evening, sir. I'm Jennifer Niana, business reporter with the Gulf Daily News. You mentioned that it is the end of the oil era. Bahrain's Sovereign Wealth Fund had anticipated this end many decades ago when they began to structure a well-diversified economy. So as a former advisor to a neighboring oil-rich state, do you think Bahrain's doing enough to tap into newer energy sources? Thank you.
Okay, and one final question is right here, and then we'll allow you to answer them.
Adel Masqati, businessman. You mentioned, Mr. Dr. Mohammed, that in Saudi Arabia, energy, it's used as oil and as gas. You didn't mention much about gas, but both of these in Saudi Arabia are actually related because most of the gas is associated gas.
Yes.
Now you rely on both of them, be it oil or gas, to either produce petrochemicals or use it as an energy source. Now, I was a bit amazed that you wanted to put off the alternative of using nuclear power because the use of oil is going to continue to be there for the petrochemicals. It is the source of chemicals. When it comes to energy, yes, I agree we have to reduce the energy as much as possible. The whole world is doing it. But how can you reduce energy in a place like Saudi Arabia when you mentioned that within 20 years, Saudi Arabia is going to be an importer? And the Saudi government has spent billions of dollars developing all these plants which require or are energy intensive. What are we going to do with all this? This is the alternative that we have chosen, be it in Bahrain or Qatar or even Oman. All these aluminium smelters have been justified on the basis of cheap energy. What are you going to do with all these? Energy is not going to be available to us because if you don't produce oil or you reduce the oil, then you will not get the gas. And the gas is the power. Thank you.
Okay, so we have, I think it was 5 questions. One was on the need for cultural change, subsidies, and the impact removing subsidies might have. Do we need to tax in the GCC to encourage different spending? Is Bahrain diversified enough? And the role of energy, the competition between petrochemical industries and energy.
Okay, thank you for the questions. As far as the social repercussions of reviewing the subsidies, of course, if it is not done carefully, there will be huge resistance to it. You need to tailor your subsidy or rationing of reforming the subsidy by taking into full account the different layers of the society and how to mitigate the different impacts on these layers, different layers. So I think, and this also comes to the other questions, don't forget that our governments are basically rentier governments. We take the revenue from oil and we try to spend it, whether it is fair distribution or not, that's another question. But basically, this is what we are doing as governments. So people, our GCC national, think of the government as that they are not giving us from them something from out of their pocket. This is our money. And they think that they need to continue subsidizing. They are not aware of the different impacts of these unsustainable subsidies. So you need to raise awareness, first of all. You need to engage different stakeholders in the decision-making of reviewing the subsidy system. And I think also the governments need to take whatever money being saved as far as subsidies and spend it in productive sectors in a very transparent manner, so the national, Saudi national or Kuwaiti national, whatever, whoever, they see that this money has been taken and been put in that sector, and this sector start to be more productive, or this area start to be more productive. If you do that in one way or another, I think that will be helpful to reduce whatever social tension that will arise from reviewing subsidy or rationalizing subsidy. The second question is with regard to taxing people. I think this is very true. GCC governments need to think about taxes. There is a GCC decision by the highest authorities, by our leaders, to introduce the VAT taxes in GCC. But it's not been implemented, at least for Saudi Arabia, it's not yet. So I think VAT need to be considered, other form of taxes need to be considered in order to generate enough revenue to sustain expenditure. But also, once you take taxes from nationals, then you need to be more transparent, because there is no taxation without representation. That's very, very, very true. So I think probably taxes, I prefer imposing taxes with all repercussions for the governments, including that they need to open their books. That's fine. That will improve efficiency, improve better resource allocation, etc. So nobody is opposing this idea, but it needs also to be done in a very careful manner if you are going to impose it on individuals. Thirdly, Bahrain. Bahrain, yes, Bahrain is doing fine, but don't forget, Bahrain is well diversified from day one. I mean, even oil, they take some of their oil from us. Don't mention that in your newspaper, please. We don't need any problems between the two governments. Yeah. So I think, but you need to regain your financial power as this financial center. You used to be a very strong financial center. This is not anymore. With the competition coming from different regional centers, you need to emphasize that more in order to diversify and not to rely on Saudi oil. The nuclear, I agree with you that oil, when you talk about petroleum, you talk about oil and gas. Now, gas is replacing fuel oil in generating electrical power and also in desalinating our water. So I think, and with the new discoveries that we have, including in the northwest of Saudi Arabia, the Red Sea area, I think we are going to totally replace fuel oil by gas in the power generation and desalination plants. So that is one promising area. Nuclear, I'm not saying I'm against nuclear. All what I'm saying that we need to be careful how to solve and settle the different and manage the different problems that will arise. You cannot just build and say, well, God's sake, I mean, nothing will happen. Of course, we all hope nothing will happen. But if something happens, who's gonna do it and how you are going to do it? What are you going to do with the chemical waste? Do you have the national experts, etc.? Series of questions. If you are not prepared, well prepared, as I said to answer my brother here, UAE is doing fine, but going the nuclear path, they need to be careful. They are foreseeing that by 2017, they will have nuclear plant, the first nuclear plant. I don't know whether preparations are taking place now or still not yet, but they need to be careful. So if to answer your question, yes, we are, most of our wasted consumption in energy coming from transport sector. There, because of the low gasoline prices, we have, Saudi Arabia is about what? Per gallon, about 45 cents per gallon. We are number 2, basically, worldwide after Venezuela. Venezuela is 0.06 cent per gallon, very cheap. So if you want to smuggle some oil, you need to go to Venezuela, as you do with, from Saudi Arabia. But, but anyway, I think this is not sustainable, the price. It needs to be improved, as I said before. But also, in Saudi Arabia, we lack public transportation, efficient public transportation. We don't have trains, only between the eastern province and Riyadh. We don't have buses, we don't have monorails, we don't have metro, nothing. So now we start to implement such policies. I hope it will not take very long to have public transportation, and that will reduce pressure on cars and will reduce, definitely with the adjustment of price, will reduce the consumption in the transport sector. Sorry to take long.
Oh, no, that was well worthwhile. Well, let's please first thank the doctor for his insights and information. Dr. Al Sabban, thank you very much. I want to thank our next event on the Geoeconomics and Strategy Lecture Series will be on the 10th of October when we welcome Aliyah Mobayed, the Senior Economist and Director at Barclays Capital. So with that, again, let's thank Dr. Al Sabban for a wonderful time.